Okay, good afternoon, traders. Good afternoon. My name is Raul Rivera. I'm the founder of themarketprofile.com. Today is Wednesday, August 16th, 2017. Let's have a look and review what we saw today in the markets, in the futures markets specifically. So, seems as though we're getting more action out of the politics in Washington than we are on Wall Street. Every single day seems to be something new that's going down in the White House, and it slows down trading. People are paying attention to what's going on in the White House, looking for the next cue, possible volatility in the market, and we're expecting that the White House is going to provide a bit of selling pressure in the markets now. Whether that's a plausible reason for just activity slowing down, maybe. It seems as though we're really in full swing with summer trading at the current moment, and things have just, they've gone, we've had the volatility, and now we've crushed the volatility. So now what? Just a continuation of the sideways markets that we've sort of have grown to get used to. I mean, it's a little sad, but let's take a look at some of the market trading that we did here today. So looking at the S&P 500, we were early this morning. We were trading as an inside day, and we have a strategy to capture best possible trade location. And the idea is to short just slightly above the highs of the day and get long just slightly below the day, as long as the market remains inside. So as you can see, G period is the period that took us outside, and G period is around, I believe, 11 a.m. or 11:30 to 12, around that period. So it did, take a while to get to the highs of the day, but if placing an order just above the highs did work out there from 73, as you can see, down to 67. That wasn't the trade of choice for me. I actually was looking to short 77 to 80, and I was looking to get long 55 to 53. As you can see, it didn't work out, but I did take one trade in the S&P 500, and for that we would have to switch over to hybrid view. And the trade was just prior to the FOMC minutes, and it was to get long at TWAP. So it's a bit more clearer to see this in profile view, so I'm just going to go ahead and switch over to profile again. And you'll notice we have a double distribution. So we have one distribution here, and we have another distribution here. This isn't one of our three shapes, right? It's not a P, it's not a B, it's not a D. Each one of these shapes has one distribution only, right? One curve. This profile has two curves, which means it's a combination of either one of these singular curve shapes that we look for, singular curve profiles. So I'm going to go ahead and just split the distribution here. And once I split it, right now it looks pretty top heavy, but earlier in the session it looked pretty good. We had a D followed by a P, right? What's the characteristic of a D-shaped distribution? We have somewhat even distribution above and below. And what's the characteristic of a P-shaped distribution? We have the larger bulk of the curve is well above the highs, well above the open of the distribution. So we have a D followed by a P, which is a trending pattern, right? We have consolidation followed by a move up, and we can show you that through candlesticks as well. Consolidation, move higher, distribution. Okay, so this is a D followed by a P. So D followed by a P, we have a strategy we call the trend strategy. And with the trend strategy, the idea is to get long volume or time. Because of the strategy and because of the way we weren't really taking out any highs, or and we had little volume and little volatility, I figured TWAP was definitely the place to do it. So at the time, moving average worked out well. 66.50 was the price I got into. I held it through the FOMC announcement. Was able to capture 2.25 points on 2 contracts. Comes out to about $225. Nothing too crazy. You know, small leverage because the trend strategy is about a 60-40 proposition, which means 60% of the time it can win, 40% of the time it can lose. That 40% should scare everybody, right? 40% is too high of a risk, right? That's way too high of a risk. So you're telling me that if I roll the dice, there's a 40% chance that I'm not going to win. But if I roll the dice, there's a 60% chance that I'm going to win, right? This 40% is less than 60, but it's 40%. It's a huge chunk. So the way I like to trade these trend strategies is to deleverage. You know, trading no more than 1 to 2 contracts per trade. That way, if I get filled and I make money, I make money. No one complains about 200, 300, 400 bucks. Okay, but if I lose, I'm losing a lot less. And where I do want to leverage is the trades of value. So that would be 55 to 53 and then 77 to 80. Of course, the market did not reach any of those levels today in the S&P 500. Shocker. The S&P 500, with the low volatility back in the S&P 500, we've gone back to just boring trading. Okay, looking at crude oil, we had the inventory report, and it seems as though the market is looking for a build because we had the fourth straight week of inventory draws, okay, which basically means there's less supply every single week of crude oil. And that might be pretty good if you are trading crude oil, but it might not be that good if you go to the pump in a couple of days and realize that gas prices may have gone up a little bit, right? Less supply equals more demand, more supply equals less demand. But in crude oil, we were expecting a rally, but instead we got a pretty hefty sell-off, negative 11,000 contracts in balance. And when we take a look at the institutional sellers and buyers, we can see that there was just plenty of selling. In fact, they have been selling almost every single day. They sold here. They sold here slightly. They sold hard right here. Maybe they covered on this day. They sold. Today, no different, sold. So let's see, what did we get? 1, 2, 3, 4, 5, 6 straight sessions where the institutions have been selling crude oil. And crude oil has been doing nothing but selling from the highs. Okay. Today we broke a key level, which was 47. 47 was tough to get above about a month ago. And today we finally broke down below 47. We'll see if the selling pressure continues. I do believe that it can continue. But we had a bracket order. We were looking to get long 20 to 30. We were looking to short 48, 20 to 30, so about 1 point away from our long position. And then we were also looking to short, I believe, 75 to 85. 75 to 85. So short, and long. When the inventory report hit, we didn't do anything. Absolutely nothing. So this is like the second straight week that we've had zero reaction to the crude oil inventory report, which kind of drives me crazy. I do really good when I trade the crude oil inventory report within the first 15 minutes after the report comes out. Anything after that, it's a confusing type of trade, right? It doesn't work. The bracket will not work. Maybe it will, but it hasn't worked for me, I guess. So I took a trade 30 minutes after. Here in my long position, I was long 2 contracts at 47.25, I believe, and then we started seeing this. Okay, and then I started seeing this, the 20 lots and greater. Let me switch back over to hybrid. The 20 lots and greater began selling really, really hard on this bar. They started selling really, really hard on this bar. So what did I end up doing? I took off my position for a 10 tick loser. Okay, I took off my position for a 10 tick loser in fear that these guys were going to be proven correct. I mean, this is a pretty large order. We were right around the zero mark, and suddenly, out of nowhere, we see negative 2,000 plus imbalance from the 20 lots and greater. That's huge. And then we keep seeing this number go further in the negative and further in the negative. You can see at the end of the day, finished negative 11,000. But I figured, you know what? Let me take my loser now instead of, let me take my loser around here instead of down here. That proved to be the right choice. So sometimes you got to take a loser here and there, but this was a smart loser. This was a smart loser. You can see these guys got short and the market just dropped. So they were mostly, the biggest shorts came in on this bar, and you can see from 47.30 all the way down to 70. That's a pretty big. That's a pretty big swing. So crude oil, I like waiting. I look forward to Wednesdays for the inventory report. But for the past 2 weeks, it's been pretty slow. Looking at gold, this one happened to be the trade of the day once again, and for the second day in a row, pretty much catching the absolute low of the day. So yesterday, if you guys remember, took a long position around 73.70, or I believe it was 73.70, right in here. One contract good for 40 ticks, or equivalent to 4 points in this market. And then today we did the exact same thing. So we had an inside day. Most of the day, it wasn't until the Fed that we finally went outside. Okay, but for most of the session we were trading inside. So I'll show you that right now. Split this distribution here. So this was it for most of the session today. So as you can see, trading inside the previous day's range. This was during the Fed, the extension higher. So the idea here on an inside day is to be long below value and short above value, and we want to get long at the single print. So here during A period, I got long just one contract. I tried to get long two. I had one at 74, one at 73. I can show you the absolute low of the day happened to be right there, 73.20. So I was about 2 ticks shy from my second order. Switch back over to the profile. Long 74 and I got out at 78. Long 74 got out at 78, so I made 40 ticks on this trade, which is the same thing as 4 points. Same idea here, catching the absolute low of the day, perfect. Absolute low of the day, perfect. And a lot of people think it's magic. They're like, Raul, how do you do that? Like, how are you catching the low of the day on almost any given market on almost any given day, or even the high of the day? And it's because I know how to locate value, and I have a set of strategies that involve the market profile. And these are statistically proven strategies. Also, the other statistic I want to share, I believe I shared this with everyone yesterday, but I want to share it again. 80% of all trading days in 1 year, okay? This has been proven to be true over many, many years. Not much has changed. 80% of all of trading days are range days, okay? 80% of all trade days are range days. The other 20% are trend days, okay? And many people get that confused, right? Many people will confuse that. A trend day is opening at a level and then closing at the very highs or the very lows, and continuously trending for the entire session from Globex to close. Okay, that's a trend day. And about 20% of the time we'll see those. But about 80% of the time, we're always going to be trading inside a range. Now, how do you determine what the range will be? Well, use the market profile for that. The market profile does a great job locating value, and when you can locate value, you can locate exactly where the market is going to build a high of the day and a low of the day. Okay. In fact, if you're a member of the room, it kind of sucks. My Ninja Trader sort of crashed on me. Like 30 minutes after the FOMC, as I'm like refreshing a chart, for some reason it just stopped responding. But and it erased most of my levels. But one of the levels I was looking to short was 87 to 89 after the FOMC, right? And that level was created based on this value area low and a couple others behind it. Okay, boom, boom, boom. That's locating value. Okay, I cannot see that. If I'm just trading a normal candlestick without the market profile, I cannot see where value is. Here, I can see value, stretch it across. Oh, lo and behold, that's the high of the day. Okay. Yesterday, to catch this low of the day, we found value around this area. Today was a different strategy, right? But we were able to still capture the low of the day. And we can do this effectively almost every single day. Why? Because 80% of the range, 80% of the time we're ranging, and the other 20% of the time we're trending, right? When I remember Bloodbath on Wall Street, if you don't, just go ahead and go on the Techniques Trader Facebook page, just scroll down and you'll see Bloodbath on Wall Street. That was one of the few 20% days, right? Which is a trend day, a day where we just don't stop moving in one direction. So 80% of the time, I can call the bottom and high of the day successfully. 20% of the time could be dangerous to do that. So that's the point I'm trying to make here. Okay, next we got the 30-year bond, and this one I took a small loser in as well. I took about a 10 tick loser on this one. It was an inside day again, much like gold. We got an extension after the Fed, and I got short just slightly above here around, I believe this value area actually. 54.19 was my short. 54.19 was my short, and I did get filled. And as you can see, the market did trade higher. I took a loser for 10 ticks on that trade, but of course, it's all Fed related, so. But I could have seen that coming. That could have been a loser. When we take a look at the 50 to 2,000 lot trader, they were buying positive 10,000. But if I switch over to the S&P 500 just real quick, we can see that they were also buying. So I was betting on a long in the S&P rather than a long in the 30-year, and thus I guess that proved to be the wrong bet, right? It proved to be the wrong bet. So I took a small loser here in the 30-year as well. But the idea was correct, just probably the day happened to be not so good. And then that was about it. Looking at the NASDAQ and the Dow, we really didn't do much. The Dow continued marching higher, but came back lower. And, we really didn't hit any levels of support and resistance at all. We did have an inside day. I guess here towards the end of the day we can sort of see that. We did have an inside day in the NASDAQ for the most of the session. It wasn't until G period, much like the S&P 500. It wasn't until G period that we did, peek our head above and create an outside day. What was it that I wanted to say here with the NASDAQ? Oh, it did trade lower. We were looking to get long just slightly below the lows, 59.01 in hybrid view. We see that we got fairly close to 01, but we were actually looking 900 to 95, just under, just pretty much where the market got bought yesterday at the very lows. So we didn't quite make it here in the NASDAQ, and of course the Dow just continues to march higher day by day, but looks like couldn't make it any higher, and all the indices basically just sort of pulled back at the end of the day. So anyways, guys, that's it for today's video. I hope you guys enjoyed it. If you did, make sure you guys click like or even comment on the video. I want to hear what you guys have to say about market profile and the type of trading that I do. So definitely give us a comment or send me a question, and I'll answer it as soon as possible. Also, I want to extend my invitation to the website to you guys, and just check me out. Visit us at www.themarketprofile.com and claim your 14-day free trial of the trading room, where you will see me trade pretty much every single futures contract that I went over today, plus others, and also see me manage those positions live. You'll also see me place the orders and where I want to buy and where I want to sell. So pretty much market profile analysis, which is extremely valuable. A lot of some of our members took the trade in gold today, and they were fairly happy with 4 points, and so was I. And we took a number of other trades as well, and we went back and forth, but definitely check us out, www.themarketprofile.com, and see if it's something that fits your style of trading. All right, guys, thank you for your time. I hope you guys enjoyed the video, and I will see everybody again bright and early tomorrow. Later, guys.